Hey, so I wanted to touch base on Curaleaf. It's been roughly a month. Last time we looked was on July 16th. They were trading in the $3 range. Now it's in the $2 range. I know they released earnings on, it looks like August 9th. So we're going to start off with earnings, just what we expected to see, what we ended up seeing, and then any type of projection going forward. Just have a couple notes there. We'll then look at the news, just what they've been up to in this past month, and then we'll just go into a technical analysis to see uh, they're currently at $2. Is that a good time to pick this one up? And if it's not, what is a good time to pick this one up? We also noted an uptrend starting in May. I believe that's broken, but we'll get into that in the technical analysis. So I guess for now, let's just go into what did we expect to see from this earnings? Or what could we kind of gather that we would see? So they told us after last quarter that they completed this acquisition of Desert Wellness in Utah. They strategically expanded their retail footprint in Florida, opening 2 more stores. They launched a mobile app and they expanded this grassroots brand to Florida. So they did all that. The only things that I think worth mentioning that weren't listed that we kind of knew ahead of time was that they expanded another brand called Find to 6 additional states, including Florida, Nevada, New York, Ohio, Pennsylvania, and Utah. Find is now in 12 markets, so another product line. Hopefully that does well. They also introduced another product line called Jams in 3 additional states, Arizona, Florida, and New Jersey. And they completed a sale of Colorado cultivation assets. So we just started following this one pretty recently. Um, I I'm kind of getting the sense that they're trying to leave certain states, Colorado being one here, and I believe they just recently left Oregon. That was like the previous quarter, I believe they did this. Um, it just makes me curious there. So some analysts here, this kind of gives us some forefront here. What we ended up getting, at least in terms of earnings per share, was negative 10 cents. We were expecting negative 5 cents. So we lost there. Uh, Revenue, they're projecting 340. I believe next is, well, here we have revenue, they did 338. So to project out next quarter to be 340, relatively flat. So, I'm fine with that. Earnings estimate, they're thinking it's going to be in that 5 cents, negative 5 cents. Seems reasonable. It might be a little bit higher because of them selling these, what is it, Colorado assets. Not sure how much that'll be worth. I think when we get to the balance sheet, we can kind of figure that out. But we'll get to that shortly. In terms of the current year, uh, the $1.36 billion in revenue, that seems reasonable. They're currently at 672 and they're projecting about 340. So they're relatively on pace. I think they can do that. This earnings per share, the way things are going, uh, that looks like it's high. I could see this company doing like negative 30 cents per share by the end of the year, the way it's going. But again, the sale, they might be selling something else, so maybe they can make some money on the back end of those deals. Um, yeah, let's just look at the balance sheet here. We have cash, assets held for sale. That was one of the things we just mentioned. So these were just like big changes that I noticed based on end of year last year, so December 22 to now. Cash went down quite a bit, about half to 85 million. Assets held for sale. Again, I'm thinking that's the Colorado assets going from 166 million down to 47, close to 48 million. Total current assets about 463. That went down pretty significantly based again on December of 22. But again, I believe that's mostly attributed to assets held for sale actually being sold. Um, on the liability side, income tax payable, that went up. Again, it's a payable thing, so not putting too much weight behind that. Liabilities held for sale, that got reduced, so that's part of the Colorado thing too. They owed money, but now they're not going to owe that because they sold those assets. So they're relieved of their liability there. Um, Current liabilities 515. So this isn't the best ratio here with the liabilities being higher. Overall, it's in decent standing. It's just you don't want to see that. You'd like assets to be at least a little bit on the positive side, the 1.0 or more, but it's it's okay. Uh, Income statement here. So what I did is I wanted to pull as many months as I could without overdoing it. So we have here on the far left, that is the 3 months ended uh, this quarter, and then we have 3 months ended same quarter but last year, and then all the way in the far right we have the December quarter. So we have three separate quarters, all about 6 months apart, or every 2 quarters for the past 6 quarters. So total revenues. This is what I'm not liking about this company. It's flat. Revenues are flat. They're not expanding like I thought they would. We're going to get into a little bit of the news about their revenue. Apparently, they're multinational, which makes sense. I kind of remember seeing that when I first picked this one up, but I wish they broke out the revenue to show how much is coming from the US, because we obviously know they sell here, but how much is coming from Europe, because that's their other market. It'd be nice to have a split there. The way this company and the news works, it makes it seem like 100% is US. And if it's not 100%, it's a very high majority of revenue. So I'd like to see that. I haven't seen a split like that, but if I find one, that'd be very helpful. Cost of goods sold. So this is another one. So it went up when we look at last year, which kind of makes sense. Costs are rising, but it actually came down from December. So that was interesting, because right away I'm thinking, oh, cost of goods went up. This is terrible. But it actually came down from 2 quarters ago. So maybe it's just like a little cycle here where costs are going up and now they're coming back down. And maybe we'll get it back to like 150. Gross profit, again, kind of split the middle. But what we don't like to see that it's going down. That was the big complaint, is that gross profit is shrinking. I think last quarter, or maybe it was their December quarter. It was some quarter fairly recently. So if it wasn't last quarter, it was like 2 quarters ago, where gross profit was like 47%, and then this quarter it's 43. Big drop. But again, if we look at December, it's actually an improvement. So it's kind of, I don't know. Again, we're still kind of looking into this, but maybe it's a cycle. Um, Total operating expenses, relatively flat, so that's good. Loss, again, they're losing money in this quarter. They also were in December. Surprisingly, though, for the full 6 months, like the full year so far, still positive. Not as positive as last year, though, in 22. Some other things that just popped a little bit to me were interest expense for lease liabilities and financial obligations. So that went up like 50% for this physical year compared to last year. Other income, not seeing as much there. Also, total other expense, that didn't quite double, but that went up quite a lot too. We also are seeing a loss on income before provision. That was way high at the end of December's quarter. Uh, Not like it is now. So I I guess I thought the December quarter would be their best quarter. It's not looking like it, at least not this past year. Net loss from continuing operations, that continues to go higher, uh, almost twice as high. It's kind of, I guess I'm just not sure how to feel about it, because obviously they're growing, so they're spending money to expand, but just not a fan of seeing that. Net loss from discontinued operations. Again, like the big thing is that the revenues are flat, but the costs are still kind of going up. Obviously, it's kind of maybe staggering, but they're kind of going up, and so just not a big fan of this either. Uh, Cash flows here we have from operations. We can see the 6 month ended, and I was able to find the 3 month ended that uh, it looks better from the operating activities. We're seeing positive compared to last year where it was negative. But apparently the 3 months I don't know, they just must have done something weird in the second quarter of 22 because their first quarter looked great. Uh, and this one looks more streamlined, going from 14 million up to 27. So it's, this year's making sense. It's like adding up, but something must have happened last year during the second quarter to cause that decrease. Investing, that is a lot lower, uh, or I guess higher in this case. They're not spending as much, which that's good. Compared to last quarter, it didn't go up by much here either, so that's good. Net cash from financing, again, that kind of just doubled, which kind of makes sense. If they do this in the first 3 months, you would think it would double, but um, I would imagine the financing, that's due to the new store openings, I have to imagine, or maybe the Desert Wellness. Um, it didn't give us a breakdown, but that's just kind of my assumptions of what's happening here with these figures. So a little bit of trade-off between last year and this year. Overall, it's not it's kind of expected. We do expect a growing company to do things like this. It's just uh, again, it's the revenue, the revenue and gross margin. So looking into the gross margins, we were able to find that this was mainly due to price compression in Florida and New York, intentional actions to reduce inventory, and an 80 basis point reclassification expense into cost of goods sold. So cost of goods sold did get a little bump this quarter that should have been there all along. So it's just a correction. You just have to deal with that. Uh, Intentional action to reduce inventory. So looking at inventory, it's relatively flat though. So I, I guess it just that's what they're saying though. Uh, Price compression in Florida and New York. I feel like their sweet spot, this company's sweet spot, is whenever whenever a state or just a location has medical legality as opposed to just adult use, like fully legal, where it's just medical legal. I think that's their sweet spot because once it's, anyone's able to kind of sell this with a license, then the market just gets saturated very quickly. And then it's like, why choose this company over another? So that's the big concern with this. They have this sweet spot. And again, it would just be nice to see the Europe sales, but we're going to keep going through this, and I'll kind of share some more of my viewpoints on this. We're also seeing the loss per share. Again, 10 cents this quarter, 17 cents overall. And then, yeah, just to kind of give us a little insight into next quarter, they just mentioned what they've been up to between quarter end, so quarter two end, and now, because quarter two ended, I think, June 30th. So really, we're already halfway through the third quarter. And so what they've been up to is in Connecticut, they opened a third store with fourth location being approved for in August. That's, I guess, good. You know, they're expanding here. They also launched Brick. I guess this is another brand. It set record-breaking sales of $2 million in the first month. This company is a little bit too big for that to make a really strong impact. It's of course nice to see, considering this sounds like a new product, and to get that off just the first month, I would hope it continues to grow. We'll see if we see a little pop in revenue next quarter, but they're also going to expand that brand into 4 more states in August. So again, we'll see if that has any type of pop, maybe an extra 10 million in sales. Who knows? They also launched adult use sales in Maryland across 4 stores. So I don't even really know what that means. They launched adult use. I have to imagine they already had the medical store in place. They just now, I don't know, changed some signs on the wall, and now it's for everybody. Not sure the bylaws of a situation like that, but that's what I'm imagining is happening there. They also completed this acquisition of an EU GMP processing asset from Clever Leaves in Portugal to further vertically integrate their European supply chain. They also entered into an agreement to sell Oregon assets. So I mentioned that earlier. That's where it is. So they're selling out of Oregon, and then wherever they said in the beginning, like Colorado or somewhere. They're leaving states where to me, I'm imagining these states are overly saturated, and so Curaleaf is just getting out of those because they're realizing they're not going to make enough by having these stores, because there's 3, like I've just, based on experience, whenever I've gone through an area that has legal storefronts like this. I'm close to New York, so I've seen New York specifically, where if you drive past one, you're about to drive past like 5 to 10 of them, because they're all going to set up in the same area. And that's kind of the concern with this company. And that's, again, why it's, to me, I believe the sweet spot for them is when it's medically allowed, because obviously people just with a farm in their backyard, they can't sell it. They would need to get who knows what type of licenses from the state, and we don't have time for that. But these guys, they've been through the system. They know how to set up shop, do it correctly, and so that's their sweet spot. But once it comes legal, it's like all bets are off. So that's what kind of worries me here with this. But going back to the Portugal thing, that is it will process flower grown at Terra Verde. Curaleaf's cultivation facility located in Portugal will allow Curaleaf to strategically expand its cultivation capacity at Terra Verde to meet the expected growth across Europe, especially within core markets in the UK and Germany. So I did a little digging here, and I'm just going to focus on that UK-Germany aspect. So here's a map of the US and the states that legalize it. The colors are up at the top. So the sweet spot here is the medical. And what I'm seeing for that one is, it looks like South Dakota, any more? I guess Pennsylvania, West Virginia. I think these two. The point is, there's a handful. There's a couple states that don't have like anything that you would imagine would start with medical. But all these states that are like fully legalized, that very dark color, those states, I think it's just going to be too much. Unless Curaleaf has like very high-end locations, like in New York City, or just somewhere very close to a city where there's enough foot traffic. Those locations should be okay, but anything that's more rural, I mean, there's just no point. I mean, that's just my impressions. Of course, we'll kind of see how this plays out. But moving on, so here's just a map of Europe. Same thing. Doesn't have all the colors. I can't hover over it, but there's a website that had this map, and basically it would allow you to hover over each of these and kind of show you where they are. And I believe most of the green states are in that sweet spot where it's medically allowed, but not much further. So Europe has potential. I will give it that. With again, it's saying it wants to focus on Germany here, and I believe United Kingdom, which those are decent countries in Europe, in terms of uh, financial. Let's just move on though. So here it mentions they're going in international, saying they're operating in 8 European countries. Right off the bat, um, I'm not sure if they're saying they have stores there or if they're just operating. Sort of like Portugal, they just bought this, I guess, flour processing facility. So they're operating there, but they're not selling anything there. Again, unless I would see the revenue broken out by country, I mean, that would be very helpful. But here's something that I'm just not a big fan of. Right here, it's saying Europe has a potential market of $248 billion. Right off the bat, don't get me wrong, that's a pretty big number, but it's not as big as I thought it would be for something like this, especially considering this is Europe. This isn't the United Kingdom. This isn't Germany. This isn't 2 or 3 countries in Europe. This is Europe as a whole, 248. And then it's going to say in 2023, so this year, just for Europe, $1.2 billion in that market. That's not much. I mean, so they're saying the full forecasted market for this year, Curaleaf puts Curaleaf's expected to put up $1.3 billion in revenue this year alone. I mean, yes, they would double that. That would be a healthy growth, a good jump. But the thing is, they're not going to have 100% of that market. I don't know what. I did the math here, and I'll just skip to the next slide for a second. So down here in this left corner, we have what their estimated market share for their products. The legal market is projected to reach 30 billion by 2023. So that's what we have. That's what they're estimating. I believe this is just for the United States. Okay, so the United States, they're projecting 30 billion for this full year. And we just mentioned how Curaleaf for this year is projecting about 1.3. So if you do the math on that, they currently have about 4% of the market, uh, and probably less, depending on how much sales are actually being done in Europe compared to US. But even assuming it's all US, that's like 3%. I thought Curaleaf had a much larger market share, and I just don't like that. I do think they have potential to come back, considering where they are. No worries about them like going bankrupt or anything. It's just we picked them because the idea was they had growth behind them. And clearly, I mean, they're saying that there's 11% growth, but it's just not growing fast enough. And they don't have the market. Just so many things about them they're not what I was hoping to get, but we didn't know that. We had to do this research to figure it out. And um, not saying I'm selling this here, but we'll kind of go over that later. So import and distribution capabilities in UK, Germany, Italy, Switzerland, and Portugal. So again, that just goes back to they're operating in these 8 countries, but it sounds like they're not doing selling. They're doing this import distribution type deal. Uh, Maybe I'm just reading too far into it. Um, but yeah, I'm not getting the sense that they have actual sales there yet. So I don't know. Maybe things are better looking than they seem. But again, here's revenue. This just shows us quarter over quarter. And this is a mistake, by the way. This should be, I believe, 336. It's supposed to be retail revenue plus this management fee income that gets the top line. So that should be 336. You look across the board, it's relatively flat. It even pulled back. I mean, we expect pullbacks, but not really at this stage. It's kind of surprising, and to see it for that long, it's not the growth that we would like to see. net loss. Of course, you know, if the revenue growth is there, we're okay with that. But the fact that it's not there, it just makes the net loss a little troubling. Of course, I do believe someday this will be a net positive company. It's just, I don't know when. Uh, Again, I don't plan on selling this until I need the money, or if it were to surge to like $10 tomorrow. Uh, Unless something crazy like that happened, or like I said, I needed the money, we'll just keep what we have. I don't necessarily think I'll invest more in, but maybe. If I do, it'll be probably small amounts. But to kind of close this out before we go to the technical analysis, so here's like the projection of full revenue apparently in the US for the legal market. So currently it's at 30 billion. Curaleaf's at like 1.2, 1.3. If they continue on the current pace of like 3 to 350 million dollars per quarter. Next quarter, 3.3. You know, the growth is there. It's just, again, the market share, it's going to be hard to get the market share, I think. And here's the revenue per year. We have 2020, 2021, and 2022. This is what kind of caught our attention, was we saw this big pop. It doubled. Like, we wanted to see that going forward. And when we saw this kind of flattening, I think we wanted to believe it would reaccelerate, but we're not seeing that. So, again, I don't need the money right now, so I don't plan on selling this. So we will keep following this until it reaches a spot where I think I'll take profits, or like I said, if I need the money for something. But yeah, let's go into the technical analysis and just kind of check back in on this one, see just what's a good time to pick this one up. So again, it was trading at $3, somewhere in the $3 range. So let's just actually zoom in here. So going back to the 16th, so that was right in this range. Yeah, $3 somewhere. I'm not sure. It was actually in the top of the uptrend that we noted that there was one since May. But since then, pretty much gone straight down. Earnings came out this week during this big red bar. Yeah, that was just, I guess, the final straw at that point. They were questioning what earnings would do. And then when they saw it, they didn't like they didn't like the results, so it pulled back really hard. This one's closing in on all-time lows. We have 230 marked, or $2.32 marked. Going back, yeah, that's actually the ultimate low, 232. And so right now we're at 278. Yeah, I mean, I don't see this one going bankrupt anytime soon, so I'm not worried about that. They're very close to going into positive. If they can do that, if they can get their gross profit back up to like a 49, 50%, maybe cut some expenses, I don't know, just expand hard enough to get a decent pop in revenue. Yeah, this one's just hard to work with at this point, because I don't want to stick with it. But again, we'll stick with it for a little bit just to see if it can kind of get a pop somewhere. That's really all we're hoping for. Because I can't imagine. I mean, if it was getting high growth like that, but it was dipping even with the high growth. Very interesting. Very interesting. We'll follow it for a little longer. But hopefully it catches itself at about 232. If not, who knows how far it's going to go. I mean, last time, let's just zoom back to the beginning. This is a fairly young company. It looks like, it dipped down to whatever, 4. It was in like the 450s, rallied, pulled back. Once it got to 450, it dropped all the way to 250. Yeah, that's rough. So I guess let's just update this. So it's currently in like the $2 range. We're just gonna cut off the pennies. We'll just say $2. Buy points for this one. Uh, I still have $3. There was a little bit of support there, also in the $4 range, very close to $5 in all honesty. There was some support there on its pullback. This uptrend, we'll keep it in for a little bit. We've definitely seen companies before. This one's kind of a unique case because the trade volume is so small, but we've definitely seen in the past something break either above or below trend for a couple weeks and then pull right back up. Doesn't seem like that's going to be the case with this one. Um, but yeah, well, like I said, I don't need the money. I think the company will kind of just be flat for a while. We're just going to kind of hope it. Currently, the play is we're just going to kind of wait and see if this one gets up to maybe like $6. If it can get in this range again, I'd probably consider just selling this one and wiping my hands clean with it. But yeah, for now, we'll just kind of keep following it from a distance, I suppose. So the buy points still there. I guess what we'll do is add $2 into it at this point. I think at this point, I'm just going to make this one fair value because I don't like it as a buy. The company itself doesn't seem like it's really worth the buy. Uh, and so we're just going to mark it like that. Like I've kind of lost heart in this one, but I do have shares of it. So I'll keep following it until I end up selling it. So for right now, buy points, yeah, $2, $3, $4. They're supported at all those levels. The fact that it broke the uptrend, don't like to see that, especially nearing its all-time lows. Hopefully it catches itself, but who knows? It with a negative earnings per share in a kind of questionable industry, um, kind of your call there. Resistance, yeah, resistance. We kind of marked it at $4, $6, $7, resistance at all those points. So I'll add in 4 as a point of resistance. I'm going to make 4 the current point of interest. The buy point, I'd be looking at 2. I want to see what it does because it's getting close to those all-time lows. The date, can update that. I'm going to unhighlight this. Yeah, I probably won't pick up any more. I'm just going to keep what I have in there. That's why I'm just going to leave this one as fair value probably going forward. If you're comfortable with it, if you like the idea of this one, by all means go for it. Otherwise, I'm going to do my best to stay neutral throughout this. But that uptrend in May, that's probably broken. I'm going to say may have broken, but from what I'm seeing, it's probably broke. Market cap, we do have that the market cap is roughly about 1.5 years of revenue for what that's worth, and it's been that way for about 2 months. Seems pretty low, but I don't know. Just my opinion. So yeah, let me know your thoughts on this. What you're seeing with this one, when you would pick this one up, if at all. But yeah, just a quick recap before we sign out. So we have Curaleaf down here at the bottom. Currently in like the $2 range. We have buy points at 2, 3, and 4. Those are just dollar points that had at least some support, roughly like a month or more. $2, that is like the new possible, but that's also near all-time lows. So very questionable. So I'm just going to leave it as fair value. If it starts on the uptrend, I'll point out resistance or fair value. I just don't believe I'll give this one a buy unless I see something very positive. I just don't expect to give this one a buy probably anytime soon. But the uptrend started in May. That looks like it's broken. The market cap's about 1.5 years worth of revenue. So in some areas it does look attractive, but it's not playing out that way. And then earnings will update that once we figure that out. But yeah, that wraps this up. So if you have any questions, I'll do my best to answer them. If you want to leave a comment, I'd be happy to read it. Otherwise, please like, subscribe, and I'll see you on the next one. Bye.